Hey everyone, thanks for tuning into the Land and Home Show. Today we are talking about pre-approvals. Hi, I'm Stephen Davey Davis, your land specialist and residential realtor here in Central Kentucky and beyond. And today we're talking about pre-approvals and sort of pre-qualifications because they're important. Whether you're in a buyer's market or a seller's market, they're things that you need. Your buying power is what is between you and what you buy. And so that you don't have to hear my big mouth talking about it, you can hear the likes of Ray Childs, who's a very, very experienced and incredible loan officer who I've just had the pleasure of working with. He untangled several knots from easily one of the hardest deals I have ever done. I just think that hearing it from him will put some things into perspective for you all. So Ray, thank you for joining me today via Zoom, and just tell everybody about who you are, what you do, kind of what your experience is in this financial world.
Fair enough. Well, as he said, my name is Ray Childs. I am with Northpointe Bank. If you haven't heard of us, you should check us out. There's not a deal that we cannot do, and he can actually attest to that.
I sure can.
I've been doing mortgages going on 12 years now. Been a loan originator, all 12 of them. As far as for what we do or what I do, it's basically I'm the person that helps you from the very beginning to the end of getting those keys to the home. And what I mean by that is, to touch on what he is asking about, is pre-quals and pre-approvals. So the very first step when you are considering buying a home should be getting pre-approved. Now notice I said pre-approved and not pre-qualified. Now the difference between the two is pre-qualified means you filled out an application, whether it was in person or whether it was online. And we ran that information through what's called a automated underwriting system, which is a computer program that takes the information that you gave us and decides whether or not on credit risk, on funds available and things like that, whether or not you should be approved. Mm-hmm. And it tells us either you're approved eligible, or you're approved ineligible, or you're just not eligible at all. So approved eligible means it likes everything that we said or everything that was sent up, and you should be able to get a loan if those items that were included on the application are accurate. Approved ineligible means that it likes your profile, but there's something in there that needs to be looked at, fixed, or adjusted in order for you to get an approval. And a lot of times it's we're not showing enough funds to close or something to that effect, but it's an easy fix 9 times out of 10, as long as you have an experienced loan officer that can look through that approval and see exactly what it is. This is also a way to catch any potential red flags that could sometimes kill a deal, or it can stall a deal, which in some cases, depending on the contracted terms, could kill the deal.
Yep. Thank you for the difference between the two, because a lot of people use them interchangeably and they're not really the same.
No, they're not the same. I mean, pre-qualified, like I said, is you filled out the application, we ran it through the automated system. Now, pre-approval takes it another step. It means that we ran it through the automated system, but now we're gathering the documentation to verify what you put on that application. So sometimes, and not knowing, sometimes I'll have a client that will put X amount of income on there, or they work X amount of hours, or they're including overtime. Well, rule of thumb, if you don't have at least 2 years history of overtime, we cannot count that as income for you. So I don't care if you've been working at this new job for 1.5 years, and ever since you started, you've gotten overtime. I cannot use it because that's not a clear 2-year history of it. So things like that start to come out in a wash when you get it fully pre-approved. So once, like I said, I'm gathering the documentation now, pay stubs, bank statements, taxes, tax returns if necessary. And then I'm submitting that information to an actual underwriter now. So the underwriter looks at the automated underwriting that you received in the first step of the process. They verify the information and what is requested on there. Then they look at the documents that we've provided to make sure that it answers all the questions that automated underwriting has brought up. So they want to make sure that the funds that we have there are all accounted for and are all usable.
Okay.
And when I say usable, meaning if you're someone that doesn't trust the bank, and I know there's more people now than I even imagined that keep cash on hand, that is not a good thing when you're trying to buy a house. Because if you're making these large deposits of cash into your bank statement, typically I won't be able to use that as available funds because we can't source it.
Right.
And if we cannot have a paper trail of where the money came from, I cannot allow that to be counted as available funds for you. Right. So another good tip is if you do keep cash on hand and you do plan on buying in the future, go ahead and start putting that cash in the bank. And the reason I say this is because there is what's called a seasoned time that we don't have to worry about verifying the money. So if the money's been in your bank account for at least 60 days, it's considered seasoned and we don't have to source it. But if you start the process and then decide you want to put the money in the bank, you're going to not only upset yourself because you're going to be mad at me because I'm telling you I can't use it, you're going to possibly lose the home because if we can't use that money, then we can't get you approved and you can't purchase the home.
I love all of this because I tend to stay in my lane, right? I can connect my people with all of the other people who help make buying a home or buying any type of land possible. So, you know, I know the broad strokes of what you all do, but what you're saying is it's so important because you're right. There are a lot of people that don't like to keep their money in the banks anymore. And often when I'm working with buyers who hit these hurdles, I often start with control the controllable. And I tell them everything that I know is right and how the process works. But a lot of times, you know, people don't like to be told what to do. And I get that, but it's kind of my job. Every movie has a main character and every movie has a director. And so I guess what I'm saying is it's good to hear from you some of these smaller things. I can always say get pre-approved, but for those people that have that cash on hand, having that seasoned time is a really, really good tip because you're right. There are more people than ever who are like, well, I've got $100,000 just, you know, sitting over here. And I'm like, well, that's not income. And I mean, it might as well be like me telling them that the sky is polka dotted. They're just like, well, of course it is. I'm like, well, but it's not. So hopefully by now, folks, you can kind of see some of the value of what a pre-approval is. And if I sum up everything that Ray said before we move on to the next question, a pre-qualification is a little less stringent. It's a little bit more general. A pre-approval has a lot more possibility for guarantee and less room for error in terms of what you're actually going to be able to do in the end of it all. And so if there's anything you haven't covered in describing the differences between those two things, Ray, is there anything else that you would say makes being pre-approved important? I know why it's important. I've definitely seen people not have their stuff together and they're like, well, I'll do it when I get to it. They find a home, they find a piece of land, and before they can find all their papers and do all their stuff, it's pending. But outside of missing out or striking out, why else would you say a pre-approval is important?
Well, the biggest thing that I like to tell people is you don't know what you don't know. And that works on our side as well. So just because I took your application, I have your pay stubs and everything looks good, that does not mean that once it gets to underwriting, the actual underwriter, that they will not find something that I did not look for or that I did not account for. And a lot of times, your loan officer and their underwriter, we aren't always in agreement about what should constitute as being able to get a loan approved. I mean, shocker. So it's a case where, trust me, as a loan officer, I want to close your loan. There is nothing more in the world that I want. And there's nothing more in the world that I hate to do than to call a client and be like, I'm sorry, this popped up. I did not know, and we have an issue. Now, 9 times out of 10, these things can be averted if you get pre-approved. Don't just fill out the application and be like, oh yeah, everything looks good. Oh, well, I'll just wait to send him my documents when I get a chance. The next thing you know, as he stated, oh, the home pops up. You have to move instantly.
Yep.
Oh, I was pre-qualified. All right, we'll go shoot it over. Well, now I'm looking at it. Well, I got a little bit deeper, and it looks like there was something from back here that the underwriter caught, or there's an inconsistency in your hours so far year to date, and I can't really use what I wanted to use income-wise. And now instead of being able to be qualified for 250,000, I can only qualify you for 230,000.
Right.
Now, those are things that can be addressed if you get fully pre-approved. If you just do the pre-qualification, I don't have that extra set of information. I don't have that additional knowledge that is going to allow me to put you in a position where you're going to be successful and where you're going to get the keys. So that's why it is so important to take that extra step, get the documents in. Let us make sure we go through the bank statements to make sure that there's not any large deposits that show up that we have to source or that we can't find something. I mean, some cases you may, receive a Venmo from somebody for 1,700, but you weren't thinking anything about it. And now you don't have any documentation to show why you have that.
Wow.
And that 1,700 that I cannot use now may be the difference in you being approved or you not being approved. So
that's wild.
There's little things. Yeah, there's little things that you don't realize that are important until I tell you, hey, this is going to be an issue. I never would have thought that was an issue. Why?
Right.
Why is that an issue? Well, I understand, nowadays everyone has Cash App, everyone has Venmo, everyone has Zelle. You're sending money in and out. We went out to dinner. I send them money. We went out to dinner. They sent me money. Now the underwriter's questioning, well, there's these transactions coming in and out. Is this a loan?
Right.
Is this something else? So the underwriter's there to limit risk on the lender side. So it's not that they're intentionally trying to find reasons to not do your loan. It's that if they sign off on your loan and it comes back that something was inaccurate or a check box was not checked, then they're liable for that. And it's not like we're talking, this is $1,200 we lent out to somebody. We're talking hundreds of thousands of dollars that we're lending out. And we're talking about fines and other things that can be levied if there's a track record of doing things the wrong way, or a little bit of a peek behind the curtain. There's what are called clawbacks and buybacks on the mortgage side, where we're supposed to be selling these mortgages off on a secondary market to Fannie Mae or Freddie Mac.
Right.
But if we have something in that package that's not accurate, they can choose not to buy it, and then that's left on the bank's books. So now that potentially can take a bank from, if you do enough of those, from being in the black to being in the red when it comes to revenue stream. So that's why these underwriters are very stringent, people. I'm telling you. So it's so important to get someone that knows what they're doing, because unfortunately, in the last couple of years, there was an influx of loan originators because we were in a refi boom. Now that the economy has shifted, we're still in the buyer's market and people are still able to purchase, but you may come across a loan originator that hasn't really been in the trenches, so to speak, that doesn't really have the experience, and they honestly don't know. And it could potentially leave you homeless in some cases, where you've told people I'm moving out and I got this house, and then there's a couple of weeks to go by, you've never heard from the loan officer because they don't know how to tell you that they didn't know what they were doing and they messed it up. And now you don't have a home to buy and you got to move out of your current home. And that's a position I hate to hear about. I've seen it happen. Luckily, I've been able to avert it a few times in helping people, but I'm telling you, protect yourself and get fully pre-approved. Don't allow someone just to send you something that's like, oh, you're pre-qual, especially if they've never asked you for any of your documents.
Yeah.
If they've never gotten any of your documents, you're not pre-approved, regardless of what they tell you, because those documents have to be verified. But that's why it's so important. And I can't stress that enough, especially in this market where it's so competitive to get the house.
Absolutely. It really is competitive. I mean, I can't say it enough. You have to control the controllable. And when I'm going to reverse, I told you an order of questions I wanted to ask you, but you're kind of segueing into something that I wanted to ask, and it's perfect to ask now, which is how long it takes. Because a lot of times people will call me and we'll sort of engage each other about, what they like and how serious they are, if they're just looking and whatever. And so when they start to get serious and they're like, well, we want to go start seeing stuff and writing offers, They're like, but it's going to take like 5 days to get pre-approved. And I'm always like, it'll take as long as it takes you to give the documents over. It does not have to take a bunch of time. So realistically, what does it take to get pre-approved from a timeline standpoint?
We would start off, have a quick conversation, you fill out the application. That in itself is 30 minutes of your time. Now, the next part of it depends on how quickly you get me what I need. And what I need is typically a copy of your ID, 2 years W-2s, 2 years of tax returns if you're self-employed, 30 days of pay stubs, and 2 months worth of the account statements that you plan to use for funds at closing. Now, anything that I ask for though, and I want to stress this because it happens all the time, I need every page of unredacted.
Yep.
So you would not be surprised how many times I get a bank statement that would just be one of 5 pages. And they're like, well, it shows the balance and everything. That's all you need, right? No.
I asked for your bank statement, not a portion of it.
Yeah. So I need all of it and do not redact anything. So sometimes I get in people there blacking out what they've purchased and stuff. I can't use that. That's unusable. It's like, trust me, I don't care what you've been doing with it. I've seen it all. So I don't care whatever monthly subscriptions you have or whatever. It does not matter.
You need to see the whole story. Yeah.
And the reason that's important is the underwriter is trying to make sure that there's not some sort of liability or, monthly recurring payment that's on there that it's not shown on your credit that they have to count against your debt to income ratio.
Yeah.
So anytime a loan officer asks you for a document, all pages, even the ones that they have marked intentionally left blank, I need that as well, all pages. Because that is what holds up things more than anything is if I send something that's incomplete to the underwriter, they're not going to look at any of it. They're just going to kick it back and just be like, why are you sending me incomplete stuff? I don't have time for this. I got other things to look at. So, so let's say that you're someone that, all right, you take a day, gather everything up, send it to me. So now we're at, day 2. So at that point, I make sure everything's accurate. I look over the application again to make sure all the figures line up, the income's correct, things like that. And then I submit it over to the underwriter. Underwriter turn time, 24 to 48 hours. But all in, you can be fully pre-approved. And what fully pre-approved means is that once you do find a house, it is plug and play. As long as there's not any issues with the title on that home, you're talking about we're able to close basically once we get the appraisal back. Or in some cases, you may not even need an appraisal depending on how much you put down.
Sure.
So being pre-approved I can usually happen within 3 to 4 days if you get us all the documents quickly.
Love that. And so as in-depth as all of this is, a lot of people are aware maybe of what a pre-approval is, but because of all of the information that is taken into account, they, in my experience, often say things like, well, I don't want my credit score to be bad because of this. I don't want a negative mark on my credit report, things like that. So how does a pre-approval, like what's the relationship between a pre-approval and the applicant's credit report or credit score?
So I joke a lot of times when I come across someone that's like, I don't want this dinging my credit. Well, I ask them, so what do you think your credit's at? Well, it's 800 something, but I don't want to ding it. I said, okay, well, this is what I want you to do. I want you to go to your garage, see if there's any paint in there, and get out a paintbrush, and then close your garage, go outside, and write your credit score on your garage door. Well, what are you talking about? Well, I mean, if it's that important, you want everyone to know that your score is that great, but not do anything with it, then that's all you're basically going to do. So just write it on your garage and let everyone give you kudos. Because if you don't want me to see if I can get you approved to buy this house, then what good is having that great credit score? So here's the thing. And let's be honest, if you have a great credit score, me pulling your credit for the mortgage, you're still going to have a great credit score.
Absolutely.
Because if you had a great credit score, that means a couple of things. You're not overextended on credit. You don't constantly have people run your credit, and you pay your bills on time. So if you say, let's say that you run your credit 2 or 3 times in a year, guess what? That's not negatively going to affect you because the bureaus have it set up where you're not negatively affected for being wise with your credit. Now, what happens is if you run your credit for a mortgage, then go to the car lot, run a credit, then go to the mall, run your credit in the store there, and then apply for a credit card online. Now it looks like you're trying to max out credit across different avenues.
Right.
That's when it's going to really negatively affect your score. Now, a hard credit inquiry is required for pre-qualification, pre-approval, any of it. There's no, let's do a soft pull and then we'll be able to see, what's going on. No, that does not work. And if someone tells you, oh, I can just use a soft pull and I can get you pre-qual, run, because they are setting you up for failure, because no soft pull is going to tell us information that is vital to whether or not you can get approved for a loan.
Wow.
So do not put yourself in that position just because you're worried something's going to negatively affect your score. That is not the case. So like I said, let's say that you have an 800 credit score and I run your credit. Let's say now it's, just for argument's sake, let's say now it's 790. How would that negatively affect you?
Right. That 10 points is not the difference between $80,000 affordability and $120,000. It's
exactly, because
it's nominal.
Exactly, because just to give you another peek behind the curtain, any credit score 740 or higher gets you qualified for the best terms on the mortgage side. Anything above 740, I don't care if it's 741 or 820, you're going to get the same options. So I understand, people want to guard their credit and whatnot, but if you're serious about purchasing a home, it has to get ran. There's no way around it.
Mm-hmm.
And like I say, and I joke with people about it, and I try to educate them. And most times people understand it and like, well, you're right, go ahead. And worst case scenario, we get to see something that's an issue that we can work on,
mm-hmm.
and give ourselves a timeline to get you where you need to be. And a lot of people don't realize this. I think it was maybe 3 or 4 years ago, all the credit bureaus and Credit Karma were all sued for giving consumers the wrong information, meaning making you think that that score that they show you is the actual score they send over to us as lenders. It is not.
Say that again, please. Please say that again, because I mean, if I had $1, I don't even think I'd need to work anymore. If I had $1 for every time someone says, well, on Credit Karma, it shows that I have this. And I'm like, well, Credit Karma is not a credit bureau, okay, or a lender. Please say that again.
Well, Credit Karma, as well as Experian, TransUnion, because they all have their own websites that you can sign up for things for. They all do not give you the information they give us as lenders. So for instance, Credit Karma can tell you your credit score is 720. I run it, it's 687. It's not because we ran it and your score went down that far because we ran a credit. No, it's because your score was already that, but that's not what they tell you. So
wow.
I've also seen it the other way, where Credit Karma says your score is a 687, I run it, you're at a 710. So the best thing about Credit Karma and going to the website for the bureaus directly is it allows you to monitor your accounts, to make sure things are accurate, to make sure that there's not something that pops up that you have no clue about. Mm-hmm. So use it in that regard to make sure everything's accurate. But if you want an actual score and you're curious and you're looking to get pre-approved, throw that score that you see on your phone or your app out the window, because that is not what it's going to be. It is never the same. I've been burned both ways. I've seen it come back lower than what's advertised, and I've seen it come back higher. But we have to have that baseline, because if there is an issue, we can work it out. Someone like myself that's been in this game for a while, I can look at your credit report and I can say, hey, all right, well, if you put $200 towards this credit card, next month, your score will go up 20 points. Or, hey, let's look at this account right here. Let's call them right now. It's an old collection account. Let's call them right now and let's see what they would accept for a full delete. Not an update saying it's paid in full. I'm talking a full delete off the account as if it never happened. So there's different ways that I can help you, but I can't do that unless I'm able to look behind the curtain.
I hope that you all are seeing as much value in this conversation as I'm seeing. I'm learning new stuff, but also it's, to me, doing this every day, some of this stuff is obvious, but I'm hoping that hearing it from another person, folks, is giving you some confidence and frankly, some detail from someone who does it on that end every single day and has for over 12 years now about how hurdles are not all insurmountable. I mean, one thing that I'm hearing Ray say is if you get me the information I need, maybe there are some problematic things, but known in advance, we can work on many of them, maybe not all. I mean, because sometimes people are just in a place where they cannot afford to buy a home at that time. But he's saying there are many situations in which we can work on some stuff and still get you a house, okay, and get it done comfortably. Get pre-approved, and I get pre-approved. I can say it like 50 times, and still sometimes it seems to fall on ears that are either unwilling to listen or just maybe distracted. I'm not sure. But are there any other things that you want to add to this conversation before we wrap up here? Anything that I don't know, buyers need to know maybe about your bank or the kinds of loans you service, or about you, or anything about the process that you forgot, like anything else, anything?
Well, the first thing I want to address is a general rundown of things that as a home buyer, you should not do while you're trying to buy a home.
Lay it on me.
Number one, do not open any new lines of credit. Let me say that again.
Please.
Do not open any new lines of credit. That means going to buy furniture for your new home. Wait until you are closed and the keys are yours. Do not buy a new car. Do not trade in your current car and think, oh, well, it's just another lease. I was just checking. No, don't do that. Wait. If you have credit cards that when I checked your initial account on the initial credit report and there's a zero balance, please do not max that card out during the process, because now before we close, we do what's called another soft pull that updates everything that we had to make sure that there are no new accounts and that you haven't ran up the balances. Now, I've had situations where we ran the information up front and there was a zero balance on all credit cards. We get ready to set up closing. We do our soft pull for the final to try to get the final approval. And we come back and this card that had zero on it now has $7 grand on it. And guess what? There's no payment listed on it. So we have to use 5% of that balance as an estimated payment. Well, that 5% balance of that payment wise was $350 somewhat, which killed the deal.
Wow.
Now they're not approved. All because they could not wait to get the keys to go buy things. And what's even more frustrating is in this particular case, there was significant money in the bank to which they really didn't even need
to use the credit. Right.
Yeah. So that, in our case, I said, do not do anything with your credit while you're in the process of buying a home. Also, if you are planning to get married, tell me, and we'll have a discussion, and we'll say whether or not it's going to make sense. Because depending on where you are at and the type of loan that you are doing, some states are what are called community property states. Community property states mean that whether or not your spouse is on the loan, we have to take their debts into account. So let's say that you get married, you neglected to tell me you were planning to get married. We were already very tight on the approval for the debt to income. Now I have to add all her debts and we don't have any of her income. The deal's dead. Now you're upset with me and I'm upset because I wasn't able to get your loan closed. So things like that, please let your loan officer know. If you plan on getting married or if you are separated or about to get a divorce, that is important as well, because a lot of loan programs require that the divorce is final and there's a full settlement statement between the two parties before you can get the loan, because they want to make sure that there's no alimony, there's no child support,
Right.
There's nothing else that's owed that has to be split between the two. So marriage, divorce, or separation are important items that should be known. Another thing, if you have been off of work for any reason, such as disability, illness, sickness, seasonal layoffs, or just unpaid time off for whatever reason, that is very important that I am aware of it, because a lot of different programs require that you are back to work at least for one full paycheck before they will sign off on your loan. So
I did
don't
not know
put yourself
that.
in a position, don't put yourself in a position to be like, we're at the end of the process. Oh yeah, I'll go back to work tomorrow. I'm sorry, say what? You go back to work. What have you been doing? Oh,
Oh, wow.
and that was a recent conversation that I had. I'm sorry, what? You just went back to work? Okay. But I will do all I can to find a way to get you approved.
Yes, you
And
will.
we here at Northpointe, we have all sort of great products that do it, but please make my job easier. So that way it will be smoother, it will be faster, you will love it, I will love it, and trust me, you will be so happy that you don't have to stress during the process. If you think that just because you've been told no in the past, as far as buying a home, that you still can't, I'm gonna give you a quick rundown of some of the things here at Northpointe Bank that we do that other places aren't doing. We have 100% financing. Doesn't matter if it's USDA, doesn't matter, it doesn't have to be VA. Usually those are only two programs that people have that can do it. No, we have 100% financing for those with good credit and you have assets. We can do 100% financing, no money down. If you are a doctor, we have 100% financing, no PMI. And we don't have to take into account your student loans, which can kill deals for a lot of doctors.
Mm-hmm.
We don't have to take those into account for those doctor loan programs. If you're looking to buy an investment property, we can qualify you just on what the rent to be receives are estimated at. So as long as that estimated rent is higher than what the mortgage payment would be, I can get you approved. As long as you have the money for the down payment. I don't care about W-2s. I don't want to see them. I don't want to see tax returns, any of that.
Wow.
Now, also, the elephant in the room for those self-employed borrowers, we know what you're doing. We know you don't show what you really make on taxes. You may be making $300,000 a year, and I look at your tax returns, it looks like you made $27,000. And I understand how much of a frustration it is to tell someone, hey, I know what you're doing. I see, what you're making. I see how successful the business is, but I know you have a tax accountant that's like, no, let's write this off, write this off, write this off. And by the time they get done, it's as if you don't make anything. And I know that's to lower your tax liability. I get that. And usually I would have a different conversation, but with us here at Northpointe, we offer business bank statement loans. So what that means is I look at your business bank statements over the last 12 months. And I look at the average deposits, and I mean the actual money from the business. So if there's like a return for some, let's say you're a construction or home builder. Let's say there's some returns for some materials that you didn't use on a thing. That's not counted. But we're counting our regular deposits that go into there. And then I average that over the year, and that's the income that I can use. So for example, I once had a client that if you went off his tax returns, he made $9,000 for the year. Okay. I put him on a business bank statement and I was able to utilize $27,000 a month as income.
Wow.
So he went from being told, no, I can't get you approved to buy a home. I can't get you approved to buy a home, to buying his dream home.
Wow.
So when I say, if there is a way, we here at Northpointe can get it done. And any questions, I don't care. I'm very communicative. As Stephen can tell you, I answer the phone.
He does. He answers the phone. He texts back. He does what he says he's going to do. I mean, he saved a lot in the last few weeks here. And Ray, I just appreciate your time today, but I also appreciate all the time that you spent on the transaction we just worked together. It's hard to put into words how stressful this job can be, because everyone's looking for that end. You've got your goal as a homeowner, as a future homeowner, but I'm working with 6 people or 9 people or 12 people that want to be future homeowners that all have their individual bumps in the road. There's always going to be bumps, even if there's not bumps with you and your credit or whatever, there's going to be something. And so to have a guy like Ray on your side, making sure that you can get over those bumps and everybody's limbs are going to stay intact and there's going to be no car totaled. I mean, it's a real gift. It's a real gift. And you would do yourself a disservice not to call him in order to see what he can do for you. Ray, I do not have a COVID plan anymore on my Zoom, so I'm running out of time. It's giving me a little countdown here. I'm on a free Zoom now because, you know, we do stuff mostly in person, but Ray and I are in 2 different cities in Kentucky, and this was the best way for us to talk. So quickly, can you just tell everyone how/where to reach you?
More than happy to. So you can reach me via phone, you can text, or you can call me. The phone number is 502-777-9968. Very easy phone number to remember.
Perfect. And it'll be right up here on the screen too.
Perfect. Or you can reach me via email. The email address is ray.childs@northpointe.com. And point has a E on the end of it.
Right.
And he'll flash it on the screen as well.
Yep.
But that's how you can reach me. I get to emails within 24 hours, text messages usually within an hour. If you call and I don't answer, leave me a voicemail because I'm on the phone majority of the day.
Yeah.
As we've been doing this, I've had to decline at least 8 calls. So I got to do a lot of callbacks after I get off of here. Or people are going to start saying, "Wow, Ray, I don't know what's going on." I mean, I understand. I didn't call back within 15 minutes. It's out of the ordinary. So give me a little bit of grace and I'll get it together. But in all seriousness, I would love the opportunity to help you, to help family members, anyone. Everyone that I work with is like family. So only thing that I ask of you now, Stephen, is let me know where I can get that same hat.
I can tell you, I got it from Paris Hatters in San Antonio, Texas, one of the oldest hatters in the whole state. They have fitted the Pope, they fitted Shaq, they have done movies. I mean, they are incredible. This is a Stetson Gun Club collection hat, and I've got 2 and probably like 7 counting. I'm obsessed with these hats. I've always been a hat person. But I really appreciate your time. And folks, this is literally all the time that Zoom will allow us today, but please call Ray. I'll make it very easy for you to get in touch with him. Please get pre-approved. Please control the controllable. Don't be afraid. It's like going to the dentist. You'll be happy in the end that you did it because it's in your best interest. And, you know, we'll talk to you all later, but until next time, peace out.